What is a real estate bubble? A housing or real estate bubble is a period of high real estate prices. It is usually characterized by high demand for real estate. Home prices tend to go up beyond what is reflected in the real-world value. Sometimes the bubble bursts when prices go down. The 2008 housing market crash was caused by high speculation. Many people couldn't afford the mortgage payments on their houses, and many of the lenders offered loans to people who couldn't pay them back. Many people were forced to default on their loans, which caused banks to lose billions of dollars. Most economists think market crashes are caused by price inflation. Causes of a housing bubble. There are a lot of factors that can cause a housing market bubble. If demand ever increases, if supply ever decreases, or if both factors combine, prices for the associated asset increase. Low mortgage rates can make homes more affordable. The housing market is getting new demographic segments. A general increase in economic activity gave low credit score people loans with high interest rates. Mortgage borrowers are at high risk. The causes of the housing market crash were speculative or risky behavior by investors. Overproduction of homes. The housing market could crash due to overproduction of homes, excessive speculation, and the fact that many people are buying homes for less than their worth. Real estate agents may try to sell their homes for less money because they have too many in their inventory. This is a way to delay the crash. New homes are not needed in many cases. Real estate can be produced for several years before being sold. Homebuilders may produce more homes than they need. It takes some time to meet demand. A downturn in the economy. Good times lead to more homeownership, while bad times lead to financial conservatism and risk aversion. If people stop having enough money to buy homes, the market may stall. It may crash depending on the level of speculation. If the economy goes down, a housing market crash is possible. What causes the housing market to crash? The average person puts most of their wealth in the housing market. Housing markets are usually stable. First-time buyers will understand what causes a housing market crash. You will be able to protect your portfolio. High fixed-rate mortgage. Interest. The interest rates on fixed-rate mortgage are at their highest point in a decade. The 30-year fixed-rate mortgage has an interest rate that is over 6.6%. Prospective buyers will have to pay more for their homes over the course of 30 years without the chance to lower their interest rate, which is bad news. Existing home prices. The median sale price of a home fell in May. Home prices have risen more quickly than incomes. Mortgage rates doubled before they started to retreat. Home values are expected to fall as a result of the housing market cooling. High interest rates. The housing market may crash due to high interest rates. People who have high rate of mortgage can be in a bad position and have to file for bankruptcy. People will stop making down payments on houses if interest rates get too high. If interest rate hikes are made, the average American may not be able to afford a home. If the interest rate goes up, they will be out of a job. But if they can pay the interest rate, they can sign a mortgage contract. General economic uncertainty. There is no certainty that a housing market crash will happen. The market could rebound or it could continue to increase in value. It is certain that the market will have a correction in the next year or so. There is a lot of uncertainty because of the war in Ukraine. Businesses haven't recovered all of their health costs from the government. Florida Housing Market Annual Report Year-End. The sale prices for the month of June were $161.6 billion. The average sale price for the month was $586,222, which was a 1.3% increase over the same month last year. The segment had 43,683 sales. The average price for a home in Florida in the year of 2022 was $522. Home sales in Florida dropped in most price segments. The highest closed sales were in the market segment of $400,000 to $600,000. Housing market predictions for 2025. Home prices are expected to rise in the year 2025. There are a number of factors that will increase the increase. People are expected to join with friends and family to purchase homes. 3D printing, factory-built structural components, and software that reduces waste are some of the emerging technologies that are likely to become more common in the construction industry. The methods are expected to improve the quality of the building The housing market is expected to start growing again. Predicting housing market crash, rising employment. The unemployment rate went up. There were 339,000 new jobs created in May. The rate bottomed out in October of 2006. The rate went from 4.6% to 8.6% in June of 2007. The rate went up until it went down in the last year of 2009. As housing market crash, household debt, and mortgage delinquencies. The total household debt increased in the first quarter of this year. Credit card balances were flat at $986 billion, but student loan and auto loan balances increased. In the first quarter of 2008, consumer debt service payments were 5.99% of disposable personal income. The latest rate shows that this metric increased to 5.73%. The technology sector is seeing a lot of cuts. Mass corporate layoffs could put pressure on this dynamic. Thank you for watching. Do subscribe, like, and share.